Hi, and welcome to the Landis Look, where we take an inside look at the world of real estate. I'm Justin, and I'm here today with Jesse. Jesse, welcome.
Hey, how's it going?
Jesse is one of the awesome members of JLG, and Jesse's a student of the market. Jesse's also a great question asker, and I know a lot of people are asking me questions about the market, so thought we'd have Jesse ask me some questions today about what's happening in the real estate market.
I literally, someone I know is renting, literally today, coffee shop, someone I see every day was asking me about the market, which
Yes.
was pretty surprising. Wasn't expecting it. But yeah, so COVID cases are going up.
Yep.
Unemployment claims are still in the millions of dollars. So what's going on with the real estate market? It has to be going down, right?
Yeah, I am getting a lot of questions about when is the real estate market going to crash and is it going down? The current, we never know the future, and we'll talk about possible things for the future. But what is currently happening is we actually have one of the tightest inventory situations that I can ever remember in Atlanta. And what that means is just the supply and demand of buyer and sellers is heavily more buyers than sellers. And you guys know, if you watched this before, that I love the numbers. The numbers last month, these are crazy. In the $300,000 price range, 250 to 300, there was 1.3 months of inventory. In the 200 to 250, 0.9 months of inventory. And so what does that mean? That number, 0.9 months of inventory, means if no new houses came on the market, at the current rate they're selling, they'd be gone in less than a month. 6 months is a balanced market. Less than 1 month means, man, there is not much to pick from. There are way more buyers than sellers. And so, that is what is happening right now. As you go up in price point, there is more inventory, but even at $750 to $1 million, it is technically a seller's market with less than 6 months of inventory. And that was not the case last year at this time.
Yeah, that's really, I think the month of inventory is a really good way to visualize it, because it's like, if you had one less, most people have more than a month's worth of toilet paper in their house, right? So,
yes.
So imagine houses, you only have less than a month's worth of houses. Like it's very, very dramatic. So yeah. Why is that? Why are we seeing that, home prices are going up, inventory is going down? Why are we seeing that with everything else that's happening in the news? Why are we seeing that there's still a strong real estate market?
Yeah, and one thing to remember with this is just a snapshot of what's happening right now. As you look back at the second quarter, total real estate transactions in Atlanta were down. They were down a pretty good amount last quarter, the total amount of transactions. But what's happened is, even though the transactions were down, the number of new properties that came on the market was down even more. And so, as you look at that compared to last year, let me make sure I'm quoting you guys the right numbers here. The number of active houses in June this year, down 36% to last year. The number of pendings in June, up 15% from last year. So way more people buying in June, way less houses available. There were 20% less sold in the previous 3 months. So that's what I was saying. There were less sold. But basically, you asked, I gave you some stats and didn't answer the question. The answer to the question of why is it happening is more people want to buy than people are moving. And so as you say, why would that be? I think COVID has made people realize if you're in a good situation, you're less likely to move. You're just like, hey, here is where I am. A lot more people we're talking to who might have moved this year have put that on hold to next year. But people who want to buy, you still want to buy. And the houses just aren't out there to buy as many as there were last year.
All right. So this is great if I already own a house. My house is still a great investment. It's still, it's going up. If I wanted to sell it, I would be in a seller's market. But so what do you think? So to someone who's thinking about buying a house for the first time, what walking into this challenging market in a challenging time, what conversations are we having with clients, and what would be your advice to them?
Yeah, on the buying side, whenever you're buying a house, I think you do want to start with the big picture. And the biggest picture questions are, do I have a reason to buy? Am I buying for a non-speculative reason? And if you do, the thing about this purchase, even though it is big financially, you're also living there. So if you have a reason to buy, hey, our family's growing, we need more space, or I'm moving to Atlanta, I have to have somewhere to live, or my lease is expiring. Those are all reasons to potentially buy a house. If the second question lines up, do I have the financial ability to buy this house? And that question doesn't mean, could I afford it on my best year ever, or my best, month of my best bonus ever? But it's like, hey, can we afford where we're going to live if things don't go perfectly? I think that's always a good question, especially there is more uncertainty now than the normal time. I mean, let's face it, this is an uncertain time. I think it's always a great question to ask, because if you're looking at it from a value standpoint, you only actually realize the gain or loss when you sell the house, right? So if you can hold it while it's down, either you can afford it or maybe the cash flow will be positive if you rented it. You're not going to have to sell in a down market unless you can't afford the house. So I think those questions are big to answer. And then why would you buy? Back to that first one, because you have a reason that you want to buy or need to buy. And we can maybe get into a little bit of that more, because I think what people are talking about buying is different than it was 4 months ago. And then the second reason is, even though it is a tight market, it can be hard to get them and prices are up. Interest rates are way down. I mean, in round numbers, roughly a point from this time last year. So from an affordability standpoint, both currently and long-term, that's a big deal. Now, I feel like real estate agents always throw out interest rates are low, you should buy a house. That's not what I'm saying. But, as you look at the affordability, why are there so many buyers still in the market? Because even though prices have gone up, interest rates have gone down, rents have not gone down that much. And so that's why you're seeing, hey, it still can be an affordability play actually to own your house.
Yeah. Well, I mean, we're seeing rates around this week, middle of July, some people are getting below 3%, which
below 3%. Yes.
Yeah. I mean, inflation some years is 1%. So you're looking at that's when you look forward, that's a really low interest rate for sure.
Yep.
So you briefly mentioned it. What are people, people are thinking a lot differently about buying a house during COVID and during these times. So what have you noticed that people, what are they valuing about their home differently?
Yeah. Before I get into the specifics, I think one thing that people are valuing is I can control this. I mean, let's face it. A lot of things in this world right now seem completely out of control. And we can't just determine, hey, is school going to be in session? What are the number of cases? Is everybody else wearing a mask? I mean, we can't control a lot of that stuff, but we can control some people are fortunate enough to be in a financial situation where they can control where they live. And I think those people want to do that. And especially as people spend more time at home, more people are evaluating what's important to them. And, some of those things may be obvious. Like, I think a lot more people are working from home. Do I have a space to work from home? If I'm homeschooling, do we have the space for that? One thing that I think is pretty interesting is I bet we have more clients looking for pools right now than I've had in my whole career. I mean, everybody wants a pool, myself included. I wish we had a pool. I mean, as you spend more time at home and you're in Atlanta in the summer, you're like, I wish I had a pool. And as the prospects are, we might be spending more time at home for a while now. That kind of stuff does factor in. And so I think, people want to have control over what they can. And this is one thing, we're spending a lot of time at home, a lot of us. I want to have control of that. And then also those things in the house that are important. And potentially even, I didn't mention this, commutes are becoming less important to some people. Some really big companies are letting people work from home the rest of the year or indefinitely. And I know multiple people that they made the choice to move because of that, because it's like, hey, I used to have to factor in this commute 5 days a week. Now I don't. And that's a factor as well.
Yeah. That's sort of the way we're doing it now. But well, that's great. Anything else that I forgot to ask or wanted, or you had wanted to talk about?
Well, I mean, you didn't forget to ask this, but man, a lot of people are asking me this, so I feel like we might as well address this issue. I've had multiple people ask me, hey, do I think that the market is going to crash after stimulus has run out, like the PPP loans, unemployment bonuses gone away, forbearance, which was granted to a lot of folks on their mortgage payments, the eviction limitations. After all the stuff that's been put in place, do we think the market is going to crash? Now, man, I mean, the answer to what's the market going to do in the future, I mean, I never know. That's always the answer to it. What am I seeing about that makes me either more or less confident relative to the general economy? In the general economy, I mean, yeah, I think we're going to see some of that stuff run out. I think we're already hearing about job losses because of that. The thing about housing that I think makes it less susceptible is, one, it's the tight inventory and the price increases. Basically, everyone has equity. So if you want to sell your house now, you can, and almost no one's upside down. I get asked like, hey, are there foreclosures and short sales out there? It's actually down from 2019, and it was 0.7% of sales in Atlanta last quarter that were short sales or foreclosures, which is, means basically none. That's only people who haven't tried or don't care. So, if there is a situation where people aren't able to make their mortgage payments or they need to liquidate their house to get cash out, I don't think we're about to see a super steep down, even if that happens, because people have equity. We just said the buyers are way greater than the sellers. And so the only way prices can go down is either sellers agree to take less or they give them back to the banks and the banks sell them at a discount. I don't see how either of those could happen in mass in the short term. Now, over a longer period of time, if there is a ton of that, sure, the supply and demand could switch around. But it doesn't seem like that's about to happen in the immediate term here.
Yeah, and the other thing too, I think, is if the economy does get tighter and there is a more uncertainty, you will see fewer large construction projects, large new home construction projects. And although that's not a huge part of the market, it does matter. So you will just continue seeing more and more like listings. And I feel like, 3 or 4 years ago, it was almost all, as the market was recovering, it almost was all new listings, resales. It wasn't new construction, and new construction is a lot of the market now. And if it does get uncertain, new constructions will slow down, which means even less inventory. And so I think you're right. I think we'll be.
And a lot of homeowners have refinanced. And so, once again, they're hopefully lowered their monthly cost on it. And that helps the ability to hold houses. We haven't seen 100+% financing and all sorts of the level of speculation that we saw before. So I think those things are different than previous. But there's no doubt the things that I mentioned at the beginning could be downward pressure for sure. But I think there's also upward pressure here that some other industries don't have. And I think that's important to consider as you think about what might happen in the future. Thanks for asking the questions today, Jesse. This is way more fun to do with you than me talking to a screen. Thanks. That was awesome.
I just saw in my head you doing it in your mirror by yourself all the time. And so I really just wanted to make you, feel a little less lonely during the quarantine and isolating. So that was really it. I wanted to check in.
I appreciate it. Thanks, Jesse. Thanks, everyone, to watching the Landis Look. We'll be back next week. If you have any specific questions about your sub-market or your neighborhood or anything we talked about today, do what so many of you do. Shoot us a private message, and we'd love to engage in that conversation with you. We'll see you guys next week. Thanks, Jesse.
Yeah, of course.